Hello and welcome to the Leaders in Supply Chain podcast. I am your host, Rado Palamariu, Global Supply Chain Practice Head for Morgan Phillips Executive Search. Specializing in global board level and executive search, my job is also to connect you with global experts, thought leaders and executives in all things supply chain. And today I'm delighted to have with us Matthew Tillman, the CEO and founder of Haven. Haven was founded in 2014 to help commodity firms automate logistics, collaborate with partners, and gain value insights into their supply chains. Basically, the goal was to essentially serve as the Salesforce for logistics, capturing the end-to-end workflow of shipping cargo. Haven supports customers around the world from offices in Singapore, Switzerland, and San Francisco, and they raised so far a total of $16 million. Prior to founding the company, Matt held technology and product leadership roles at several finance and advertising companies, specializing in artificial intelligence. But before that, he was the son and grandson of truckers. So he's the first in 3 generations not to drive a truck for a living. So there's an interesting story over there as well. Matt, pleasure to have you with us today.
Thanks for having me.
Our pleasure. So tell us a little bit maybe about Haven and the story of the company and what is it trying to achieve?
Sure. So, Haven started in 2014. We really founded it after I'd been in advertising automation for 8 years. Prior to that, using machine learning to automate the distribution of advertising. And prior to that, I built software to support algorithmic trading in the financials and futures and Forex space. And in both of those industries, they were using data to make decisions in real time. And my co-founder, Jeff Weiner, who was ex-Apple supply chain, he and I were having a conversation one night for dinner, and I was telling him about how I tried to book a cargo to send a truck to South America. It's a very bougie problem you have after selling a company. My wife had okayed me racing across South America in a truck like a maniac. And so I went about trying to book freight, and I was telling him that how ridiculous the process was of price discovery in this industry. It reminded me a lot of bond pricing in the early 80s. You can read about it in Liar's Poker and all this type of thing. And so we saw that there was a real challenge around helping people communicate better when it came to either price discovery or documentation execution, whatever it is, that end-to-end supply chain, helping people just operate with more efficiency using data like you use in every other industry. And that's really why we started the company, just to help customers automate more of their logistics.
Got it. So basically, coming back to because I think it's a good analogy with the Salesforce for logistics, right? It's basically, it's kind of like a software, isn't it? It's almost like a software to automate your logistics.
That's right. Yeah, we're a pure software provider, so we can't, get you a sweet deal on customs or anything like that. That's not where we play in the space. We sell SaaS-based annual subscription license software that helps you do everything from automate the execution of documentation, so everything from generating shipping instructions through bill of lading draft and modification on the bill of lading, even in runtime during a shipment on the water, clear down to rate card management and amendment management, which is currently a nightmare in the industry, a nightmare of spreadsheets and emails. So as a company, we're focused on helping you remove email and poor sources of unstructured messaging from your organization. So very much like a Salesforce.
Yeah. Well, make it simple, right? So you're basically making it simple. And this works for, your problem was, and that's an interesting story, drive a truck in South America. So hopefully we'll get to that as well. So you sent your truck to South America, but obviously this applies to pretty much anything, right? From sending a truck to sending
That's right.
Smaller items as well, I guess.
That's right. Yeah, we don't typically focus on the parcel space, not so much because the product doesn't work for that, but because we're focused on large volume shippers, because that's where the problem is most acute. They have razor thin margins, and so every dollar they spend on operations is a dollar out of their margin, right? It's very straightforward at that level, and the margins are so thin that those dollars matter. Whereas if you're in, shipping personal effects like I was trying to do, you're going to pay whatever it is. Let's say it's $4,000 for that container to get a truck to South America, and then goodness knows how many people you have to pay once you get there, right, in order to get the truck out of the container. So that type of thing, there's a lot of space. There's a lot of room in that type of shit. When you're looking at aluminum trade or aluminium, since we're in Singapore, trade to be proper, copper trade, something like that, manganese, there's razor thin margin. The premiums are really well defined. They're often contracted. And when you have a situation like that, logistics makes up such a huge variable cost that you want to be as streamlined and as efficient as possible. And the way that these commodity trading firms were working is that every time they open up a new trade lane or establish a relationship with a new counterparty, they have to almost create a new logistics team or add more operational headcount to a trading desk. And so price of their commodity was decreasing, margins were decreasing, operational expenses were increasing. And so that's a great place for technology to play, especially automation technology to play.
Yes. And actually, that's where you started, right? So you focused actually on commodity firms first and foremost, and probably they're still the bulk of your clients, or
they are, yeah. I think people have used Haven to ship everything from toothbrushes and razor blades to millions of tons of copper and aluminum and all those types of things, and so it really works for everything. But they were the bulk of our focus because, like I said, it's such an acute problem, acute challenge that they have.
Yeah, and tell us a little bit on how, and it might be an obvious question, but just to go into the depth of it, how do you differentiate yourself from a traditional broker? Because I know you're quite adamant about your brand as a software company.
Yeah, well, I think the one very specific way is that we can't provide you freight. So we had a customer call us and they said, hey, what are your rates like for X, Y, and Z? And I said, well, I don't know. It's a bit like asking Excel to get you rates. We can't really do that. The thing that you can do is we have a procurement tool you can license. It's a little bit like Ariba. And so you can license that tool and use that to connect with your network of whether they be bulk brokers or container lines or what have you, 3PLs, whoever it may be. But in terms of freight, it's really funny. We used to get because in the space, there's so many brokers, like everybody's a broker. And people would call us and say, hey, what are rates like from here to here? And I'm like, I don't know. Like, you tell me.
Yes.
So no, we focus purely on the software. There's so much opportunity just in this. The industry's so big, there's so much opportunity. We really focused on software for BCOs specifically. There were people making software to help the shipping lines utilize their assets better. There were people making software for the freight forwarders to help kind of arbitrage and take advantage of market opportunity better. And we saw a large gap pretty much only filled by SAP and Oracle and JDA and GTNexus and these legacy software providers. So we saw a real opportunity to bring automation to the BCO themselves.
Yes. And it's a sweet spot. Definitely. How do you get your data? Because that's a key. I mean, that's a key crucial part of it, right? I mean, how do you make sure actually how do you get healthy data to be more accurate?
Yeah, I mean, this industry is not at a lack of data, but it's usually not the cleanest data. I think there's a few things that we learn from other industries. The first is most of it's customer-based data. So a customer uploads their rate cards. It's not so much a trick of getting the data. It's making sure that the customer doesn't have to do any additional work in order to use your platform. So if they upload a rate card in a traditional system, you've got like humans in the back end keying in all the rates to, all the different port pairs. That's not really operationally efficient. So we built a lot of tooling around being able to capture rate cards in any format from any of the shipping lines and automatically extract the data from that. And that was the first step. It's kind of this like rate management tool. We call it the Rate Explorer. The second piece is how do you capture information that's effectively just dialogue, right? Global trade is two people and then adding more vendors to the equation, but a couple of people that just want to trade goods, right? But there's so many different hands out. There's so many different people participating in this conversation. That conversation happens over email today or WhatsApp or WeChat if you're in China, right? So how do you capture that information? We've spent a lot of time building tools to capture that data and to clean it, to scrub the information and get it into a single location. Mm-hmm. So that part of the platform works effectively like TripIt. If you travel or if you have any travelers on your podcast, TripIt basically takes all the data from all the different the air carriers and all the different hotel providers, takes all your booking confirmations, et cetera, all your rates, and collects that information, puts it into their app so that you have a single centralized source of truth for your trips. Right. And we saw that as being a huge opportunity for the freight and logistics industry. So we did the same thing for 50 plus carriers and something like 1,100 different freight forwarders. And so we're able to intercept all those emails, all that conversation and create structured data from that. And that gives us everything from, booking documentation. We get that from both the email stream, the conversation stream, as well as EDI, as well as API, depending on who the carrier is. And so it's just all these data sources that we had to be able to collect.
Mm-hmm. No, but that's fantastic, right? Because I think that's probably that's why it saves a lot of time, right? Because you waste a lot of time trying to mix and match the different sources of truth, right? So if you have one single source of truth, that saves a lot of your time, hassle, and
that's right. Yeah, it's typically done by, our customers are usually the types of companies that do their logistics in-house. And when you're doing logistics in-house, you have a person that does nothing but go to every single carrier website on a daily basis, copy and paste tracking information into a spreadsheet and send the spreadsheet around to the rest of the company so that people know what their on the water risk is. And so there's those types of things that we focused on automating. We do everything, we automate the types of things you're doing today, basically in a similar way to the way you're doing them today, but with machines instead of people. And so you go from, 8 hours of shipment on manual processes, documentation to sub 1 hour human labor per shipment with regards to documentation, customs clearance, et cetera, et cetera. Mm-hmm. So it's a massive benefit to our customers.
Mm-hmm. Yeah, definitely. How important? Let's talk a little bit about also the series of investments that you went through. You've gone through. How important was it to attract investors, and how did it impact your growth speed?
Well, so I think there's a common misconception, especially in Southeast Asia, in terms of how VC as an asset class works, because it's a different type of asset class, right? You have real estate, which everybody's obsessed with in these parts of the world, this part of the world, and that's because they haven't had a stock market that's returned 30 years in a row, right? And so the asset class itself is something very particular. And so what this means is, what I mean by this is, Haven has a large TAM, a total addressable market. Mm-hmm. Because unlike a broker, we're not going to fight for 5 to 15% of a customer's inventory so that we can sell them, so that we can arbitrage freight rates and sell them insurance and all these sorts of things on the back end. We sell software. And so as a market, every shipper in the world can use software, right? So first of all, it's important that you have a big addressable market.
Yes, I think I was reading the numbers where it was staggering. It was like $1.6 trillion market that you're addressing. So that's huge.
That's right. Yeah, it's a massive market, and I think it's funny when you go into pitch a VC, you don't really have to pitch that it's a big market, because they look at it and they're like, okay, well, it's everything that I've touched or eaten or whatever, yes. Right? So it's already a big market, but I think you want to see that it's a big market and it's growing in certain areas, right? And that our take on it's going to be a little bit different. So we had to have a very different take than everybody else, because there are so many startups out there that are just freight forwarders. Some are freight forwarders in disguise. Most are just freight forwarders, though. In fact, legally registered in the U.S. as freight forwarders. And so we looked at it and we said, well, everyone has built like a freight forwarder, or they built software for freight forwarders. So we're going to focus exclusively on this BCO market to give them the information they need to make decisions, to be able to automate more of that, bring more of the control in-house over their logistics. And that was a unique value proposition within the VC community when we started in 2014. The second piece is to raising money is you have to grow at a scale that asset class is pitched. So what that means is if you're an investor, you have liquidity providers, limited partners behind you, right? They are large pension funds, the sovereign wealth fund here in Singapore, et cetera, right? And you need to be able to grow at a pace that will return the value of that entire fund. And so software companies are geared to doing that because they get network effects, they get great economies of scale, great margins, et cetera. We have, this year we'll process 3.2 million tons of cargo, 3.8 million tons of cargo, somewhere in there. And that's 1 year after launching our TMS, right? That type of thing can really only happen through a software company. Right, those are big numbers very fast. That's like 10% the size of Panalpina in less than a year and a half of operating the business. And that's because we don't have to hire 500 headcount to support that. We've automated so much of that workflow, and our customers don't have to subsequently hire all those people as well. That's a really good fit for a VC asset class. So after you get all of that together, you go out to the market with a package that says, here's the rate of growth, here's the rate of return, here's the TAM, here's our competitive landscape. And then it's really just a matter of negotiating the price and the size of the raise that you need. The other piece is you ask, like, how does it help you grow? This is the biggest thing for startups, is that if you don't have the right management in place and you take a bunch of money and your management doesn't know what to do with it, then it's a completely pointless endeavor. You shouldn't even raise the money. So you have to have the people on staff that you can trust to process the dollars. Mm-hmm. It's not really about what number you raise. It's about how much can you process, right? And return the metrics that your investors and you have agreed So that's really those are the big tricks about fundraising. There's no other, otherwise you just go, you talk to 70 different firms and, you get 5 term sheets and you figure out which one you want to go with, right?
Yes.
It's pretty straightforward math.
Yes, great. Back to Excel, right?
Yeah, exactly.
And what made you come to Asia and Singapore in particular? Because I know that there is a specific reason also why Singapore.
There's a couple of them. I mean, obviously Singapore, big trading hub, a lot of commodity trading firms here, a lot of volume here, and all within a few blocks of where we're sitting right now. So I think from a lead gen perspective, it's very straightforward, right? You want that. You want a low cost of customer acquisition at a software company. The second thing is that I happen to be here. If you want the background, the actual story on this, I happen to be here with my co-founder in 2014. I had just sold my previous company, media company, to a company called Conversants. It was a really good exit, and I was just done with media. And I wanted to be in a less corrupt industry, so I picked shipping naturally.
And I love how you picked the term "less corrupt."
Not totally. Yeah, exactly. Less corrupt. I'm not sure that worked either, but anyway, so I was here in Southeast Asia and with my wife and a couple of friends, one was my co-founder. And we floated the idea that price discovery was broken to a couple of investors here locally. And we had a partnership meeting, probably because of my prior exits. We had a partnership meeting on the following Monday with a major LP, which here in town, which is Temasek. And so it was a really fascinating turnaround, a quick turnaround, just to show you how interested this country is specifically in terms of being able to capture trade flows. So if you look at ports and you look at the way trade changes over time, Singapore is heavily invested in automating ports, but Port of Singapore Authority, they actually own 27, I believe. I may get that number wrong. I think it's 27 ports around the world. So it's not just Singapore. And I think that's the thing a lot of people forget, is that they care about being able to capture revenue on trade flows all over the world. And so they really want, wherever trading is occurring, that's where the Singapore government wants to be. And I think it's a really smart position to take. And so we kind of fell in love with the country and the space just because of the attitude that they have towards trade. It's such an important, vital part of the economy here. So that's really why we're here. Talents, obviously on the logistics side, especially early on before we had a lot of those automations in place, logistics talent here is phenomenal. So it was really great to draw from.
Yeah. And if we had to dig a little bit deeper, what are some of your biggest partners and supporters of the company? Because I think you also work closely with, is it EDB or the Singapore government? Or?
Yeah, well, so all of them, all the different agencies here have been fantastic for us in terms of support. And just like little things, like I need a real estate broker that will help you out, or when you're getting bank accounts and things like that. Just really smart structures for how they help entrepreneurs set up over here. Entrepreneurship and IP general is really important in Singapore as a country. And for us, when you're picking countries to set up offices in, you want countries that have a certain amount of neutrality. We're in Singapore and Switzerland, which is where we host our data, in Singapore and Switzerland. So we're set up really well for commodities, for trade purposes. We're not actually a U.S. company, right? We've got a U.S. branch, which is R&D, but the rest of the company is all international. And it was done that way to provide, in fact, the name of the company, Haven, literally means a safe place to trade, a safe harbor. That's why we picked the name. And so you look at Singapore as a safe place to trade because the rule of law is very strong here. And that's really, really important. So in terms of the government here has been very supportive of the company. And I think the thing that shocks people is the shipping lines have actually been very supportive of Haven because we're not trying to disintermediate the relationship that they have with their customers, right? In order to get full benefit out of Haven, you really have to have shipping line relationships. So I think that's been something that people have been shocked by, is just how helpful the shipping lines have been for us. All of them have been super nice to us, actually.
Yes.
Yeah.
But let's talk about the 3PLs, because the shipping lines might have been nice to you, but how about the 3PLs? I mean, did you have any challenges with those guys? Because I mean, ultimately, you could potentially take away some of their cheese, no? Or...
Yeah, well, so I think here's the thing with 3PLs is if our customer wants to use a 3PL or a carrier, they onboard a 3PL or carrier and it works just fine. Like, we don't juke in the middle there. I think there's a trend that is irrespective of Haven's success. There is a trend in the industry where more and more customers are bringing the basics of logistics in-house. They want to take more control over the logistics, especially the high volume customers, right? So when you look at 3PLs, they really don't have a market there anyways. However, what I will say is that when our customers are evaluating 3PLs, and they use them in certain trade lanes for customs purposes or for warehousing space or for trucking contracts that the 3PL manages, that adds a lot of value to our customers, right? When you take risk, 3PL is meant to offset risk. Right? It's meant to offset the risk of headcount. It's meant to offset the risk of warehousing space. It's meant to offset the risk of whatever it may be. Right? 3PLs and freight forwarders, I'm going to use them interchangeably because they're effectively the same thing, or at least there's 100% overlap on the products that they offer. The problem with that model, though, is it introduces selection bias in the supply chain. A 3PL gets a primary, secondary, and tertiary carrier they're allowed to choose from when the origin at a BCO books, right? Origin BCO says, I need a pickup. Here's my primary, secondary, and tertiary carriers. You pick which one works. And then what happens is there's a lot of visibility lost between that selection and the cost of that selection and what the customer ultimately wanted. And so what we really provide when a customer is using 3PLs, and we do have customers that use 3PLs all the time, DHL, Kuehne+Nagel, Panalpina, all these guys. What they really look for is the 3PL servicing their business in the healthiest way for the business versus the 3PL's margin. That's number one. And number two is, what value add can they provide that I don't want to take on as a BCO? Does Kuehne+Nagel have warehouse space? Does Kuehne+Nagel have trucks that they're going to buy and assets that they're going to buy? Do they have planes that they're chartering? All of that is really valuable, and I think there's going to be a place for the 3PL for a long time, so long as they focus on asset ownership and offsetting the asset risk that a customer doesn't want to take on. In terms of documentation and generating documentation and getting HS codes right and things like that, if your job is copy and paste, that's a short-term job. Those jobs are going away.
Yes.
And I think, systems and machines can copy and paste a lot better than humans can.
A little better, a lot faster, yeah. Let's talk consolidation for a moment. I mean, how do you see the future of the industry? Because I know that you have some clear thoughts on this.
Yeah, I think we're going to see in this industry what we saw in banking and finance over the past 30 years, 20 years, is we're going to see a lot of consolidation. There are 190,000 registered freight forwarders in the world. Those are registered, but probably a lot more than that. I think if you go to the Wikipedia page for freight forwarder, you're going to see a couple of guys sitting outside of a signboard in Shanghai or something, right? Basically a garage. And so anybody can be one. And that doesn't mean you're going to be successful. It just means there's a lot of fragmentation in that market. So it's ripe for consolidation. The other thing that you're going to see in this space is it won't just go from in the banking industry, we used to have hundreds and hundreds of banks in the US, right? Hundreds of banks in the US, maybe thousands. And now there's 6 that matter. Yeah, there's 6 big ones that matter. Everybody else is a subsidiary for the most part, right? So you get some small specialties, but mostly it's consolidated. The same thing's going to happen in this industry because it's really about people. All those businesses are consulting firms with financial sales teams on the back end. And you can buy sales firms, right? You can buy sales teams. So what we've seen from the carriers is really fascinating lately, is the carriers realize that the freight forwarders' main value add was managing difficult to manage customer situations, right? And having the knowledge in-house. Well, a carrier can buy into that knowledge base very inexpensively, as we've seen over the years. And then it's a matter of how do they operate that business? What are the economics on that business? We've seen Maersk with Damco, right? We're now seeing Maersk kind of distance itself from the carrier space, right? Over time, they're going to rebrand that, repackage that. They talk about going vertical, right? A lot as a firm. I think that's going to become very, very common, going vertical as a shipping firm. We're going to see more and more of that.
Yes. Anyway, it's an interesting example that you choose with Maersk and Damco, because there's not a lot. I mean, now we've seen CMA-CGM going and acquiring the stake in Siva, which is somewhat part. I guess it seems to be following the same lines. But just to kind of add on your thought, because I was saying this, and I think I was sharing with one of my friends who's the CEO of a freight forwarder, and he was coming from the perspective that actually whoever owns the relationship with the client has the upper hand. And typically, the freight forwarder have a much closer relationship than the shipping lines at the back end.
That's right.
So his claim was that as long as the freight forwarder manages to have the technology to back up and automate all these painful processes and continue to have a relationship with the client, they will actually continue to have an upper hand as compared to the shipping line.
I think upper hand is probably the right term to use, though I'm not sure it's the one you wanted to use. But that's exactly right. When you drive demand, then shipping lines will work with you. When you don't drive demand, they won't. And when they think they can get the demand themselves, they'll just do that. I think the thing that prevents shipping lines from owning 100% of those customer relationships is, one, they don't want to. A lot of it's not profitable business, and it relies on carrier rebate structures, in fact, in order to even manage it. So carriers have historically used the freight forwarders as channel sales, basically. For them. The second piece that your friend mentioned was what we in the software industry called stickiness. And I think a freight forwarder gets their stickiness not just from the fact that they like to hang out with one another. I mean, maybe it's the case that BCOs really enjoy hanging out with their freight forwarder salespeople and their freight forwarder ops people. I don't know that that's the case anymore. I think those days are becoming less and less over time. But what I do recognize is that if you've sold off or if you've acquired risk from a freight forwarder, if I'm a BCO and I've paid incremental dollars to work with a freight forwarder, and that freight forwarder has offset some amount of risk in my business, then that's really sticky. I know I can always go to that freight forwarder for warehouse space. If a shipping line comes to me and pitches a new business, which is why I think it was smart that CMA and SIVA tied up, because now CMA can say, see, with SIVA, they've been doing this for years. Their teams are here. Their teams are in place. No change, right, for the customer. When in reality, it does actually change for the customer, because then it ties up the provider basis. SIVA now gets better provider status with a CMA than they would have otherwise, right?
Yes.
Maybe it was always the case because of some deal we don't know about. But my point is, like, the selection bias is inherent in that relationship, just like it is with Danco and Merck's line. Even though they'll tell you, no, we'll use the best provider for your shipment, I think that doesn't matter. Mathematically, there is selection bias in that process. And I don't think that's necessarily a bad thing, but it exists.
Right. Yes.
And so we're going to see a lot more of that. And SIVA is sticky. And so Apex Maritime, Carrier Logistics bought Apex Maritime because Apex Maritime had a sticky executive staff. But the reality is that executive staff, you can hire them away after their 6-year earn-out or 2-year earn-out or whatever it is, and then you get that stickiness, right? So I think that's the trick that they're going to have, is that it's like saying Accenture is stickier than KPMG. Maybe they're both consulting firms. You can put them on a bid every 2 years or 18 months, like you should do, and find out, right?
Yes.
And so I think that's the trick that they're running to, which is why assets. I keep going back to this. Assets are so important for freight forwarders now.
Yes.
Really.
Yes. What is the most important mark that you want Haven to leave on the industry? Big question, but what's the impact that you want it to have?
Well, so what we're seeing already, the impact that we're seeing with our customers now is that we've changed the economics for their trade. We've completely changed the economics. The expectation now from our customers is that the operational costs are 10x less, at least, than they ever were in the past, right? So they're 10x less than their prior best. And that changes the economics of the commodity trade. So if your commodity share trades at $135 premium, let's say you're shipping aluminum per ton, you're going to sell it at $135 markup to your customer. That's contracted usually. And if 25 of that or 50 of that or 100 of that is going to logistics, now it's 10x less from an operational perspective. So I think the thing that's really exciting about working in raw commodities in particular, or logistics generally, but raw commodities in particular, is that the scale is so great that you can save tens of thousands of hours of human life. Like, that's the impact that I want to have, is like we can save tens of thousands of hours of human life can go into literally anything else is more valuable than copying and pasting. Like, I'm obsessed with this. Like, people are always like, AI's bad, email's bad, all this stuff. But the reality is, like, that human life can go into literally anything else and it's more valuable.
Yes.
Right. And that's really exciting, I think. Right. We can change the economics, which changes the expectation that people have. That's how you have to change industries, is through their economics. You can change how much you can pay a laborer. If you got a mine in Congo, right, my guess is that labor is not getting paid a whole lot. You can actually afford to do that and maintain your margins. You can have a healthier, more sustainable supply chain. You can get better talent to work with you. I think that's the really exciting thing that we're seeing.
Yes. Yes.
Yeah, so basically your impact on the overall cost model, and then saving 10x is huge.
Yeah, it's a massive return. I mean, you save the lowest amount that we've ever saved a customer is something like $25 per container. That's the smallest amount. And in that particular trade, it was already in the recyclables trade. So that's basically doubling the margin on a container for them. They only make $25 to $100 on a fully loaded container on the front end side. And so that's really valuable in terms of savings, right?
Yes. No, absolutely. It's a no-brainer for somebody to use your material.
Right. Yeah, it's a really straightforward value proposition when you can go in and say, I'm going to bring you $5 or $10 and you're going to give me $2.
Yeah.
It's a much more straightforward conversation.
You don't need to be a brilliant mathematician to figure that one out. Matthew, one of our listeners was asking, and we had to have the question also on blockchain in this podcast. So he was asking, how do we get over the black sheep in the blockchain room, aka customs? Yeah, so it's a big question.
Is that the black? I think that's a really good question and very specific. I think there's two things about blockchain. One, we have to mention it in every podcast because you want more listeners. So that's like very straightforward.
And we're going to do a lot of podcasts in the future. IBM is coming with blockchain. So
that's fantastic. You should get a demo of the product. So I think in terms of blockchain, there's so many things, right? So I'm actually a software engineer by trade, and so I have a couple of different takes on it. But I think the reason it's exciting in this industry to start with is because the industry is full of trading. Right. In global trade, it's people arbitraging some amount of information asymmetry that they have over their party or counterparty. And blockchain brings about the hope of truth, right? The hope that we can all still do that, but then have a true system that we all agree that this is our general ledger across, enough nodes. I haven't seen a solution in our industry yet that actually addresses the problem that the industry has. In a way that we couldn't address before. Haven versus local shared drive plus blockchain, right? All these things are just ways of communicating. And I think blockchain specifically with regards to customs, I don't even know that it really, it's interesting. We have customs agents that love it when our customers use Haven because the customs agent gets paid faster. Like everybody's happier, right? So from a payment network perspective, I think blockchain makes a lot of sense. I think its only real valid use case is actually Bitcoin. I think there are and smart contracts if you're on the Ethereum side. But in terms of who initiates that smart contract, that's still done offline, right? It's still like a receiver has to be at port to say that it crossed the gate, and therefore it crossed the gate, and that gets registered in blockchain. So what we have to do to make blockchain work, though I'm not sure it's worth making work really in its current state, is it's a shared database, and a lot of different companies have to agree that they want to use the same shared database, which is not happening. The consortiums are small. They're too small to justify the number of nodes required in order to prevent a 51% attack. And each of the banks has now decided to silo their own blockchain, which is the same as just saying that, we're, 5 of us are getting together and using the same instance of Oracle or the same instance of SAP or whatever. So I don't think we've seen the real use case in the shipping industry. And I don't know that customs will be the biggest problem. I think the biggest issue will just be that they're all siloed. One of our customers did a blockchain transaction as a test, and they ended up paying a pretty hefty premium in terms of market fees because those are not predictable, right? So your network usage fees, your checksum fees, increase or decrease over time, and you really don't have any control of it. So that was one piece that happened. And in the commodity trade, it's really difficult to justify that. The second piece is they said, well, we saved 30% of the standard manual operation, or 70% or whatever the number was. And that's very common for Haven customers too. That has less to do with blockchain. It just has to do with the fact that you've got a decent collaboration system, right? So I think I'm looking for blockchain to first solve international payment problems, which the current international payment scheme is difficult to deal with. I think there's a big value in freight forwarders just dealing with payment clearing. We certainly do it for our customers as well. So I think that's kind of
sweet spot.
Yeah, that's the sweet spot is in payments right now. It's not as anonymous as everyone says. For some reason in the industry, everybody talks about how anonymous blockchain payments are. They're not really that anonymous. It's actually pretty trivial to find out who made the payment to whom. And I think that just because they're encrypted from a record perspective doesn't mean all the metadata is encrypted. So it'll be interesting to see kind of how that rears its ugly head here when people find out where that model is going.
Yeah, and I need to bring this up because I asked the same question to Professor Sheffy, who's the dean of the director for the transportation and logistics at MIT, and asked him what's his opinion of blockchain. And he said that blockchain supply chain is as overhyped as RFID was back in the days.
Yeah.
Which goes contrary to all the things that you read on LinkedIn or wherever you go and see blockchain everywhere. But in actuality, what he was saying is that there's very few actual case studies, real case studies being done, and it's mostly demos, or it's more like a proof of concept somewhere, but it's not really applicable yet. And even for payments, I mean, I was reading, and I'm not an expert at all, right? But I was reading that it's really slow. I mean, to make it is fairly slow. I mean, you cannot compare it with a MasterCard or a Visa system at all.
Well, so actually, I'm going to disagree respectfully on the last point, because I think that blockchain transactions on the Bitcoin, on the Lightning Network specifically for Bitcoin, it's actually much better than a bank, because it happens 24 hours a day. You don't have to wait for the payment to clear the next day. It happens within minutes or an hour, right? Versus an 8-hour to 18-hour wait period. So I actually think that it is very good for international transactions in terms of when it hits your Visa card. I mean, Visa and MasterCard are front-ending that, and it really depends on who you want to be your front end. One of the bigger problems with blockchain is that, I don't see too many use cases. I see plenty of use cases for it, but they're all satisfied by current technology. But it also, it just offers a hope, right? I think right now it's just a cool technology that there should be a lot of demos about. We should be doing this. Like, I was hacking on the internet when I was like 14, and I ended up making a career out of it, right? And so I think, that was really early on. That was before we had proper e-commerce and we had shopping carts written in Perl scripts and all these sorts of things, right? So I think you have to start hacking early on, and eventually something will come out of it. It is a shared database. The concept is really cool. Like, mathematically, we can have a shared database. In terms of, it's overhyped for the shipping industry, but hopefully that hype leads to investment, which leads to some green shoot coming out of it, which I would be excited to see. But I think the payment thing has been made a big deal of because early blockchain was so slow for clearing, or early Bitcoin was so slow for clearing, but now it's much faster. Lightning Network transactions are really, really fast and pretty low cost relative to the total cost.
And there was another question from Matthew, just to move a little bit from blockchain. So he was saying, apart from price and service, what topics do you see driving 3PL selection in 2019? And I know that you talked also about assets.
Well, I think that really is the big thing. If customers are going to less and less, how should I say this? Customers are going to demand more and more of their 3PL, and they're not going to pay $100 for ISF filings and $50 for BL changes and things like that. That business is gone. It's dying or gone. And the other side of things on the 3PL side is that was a really high margin business for a company like a DHL to have. And that high margin is not there anymore. You can no longer justify labor arbitrage. I don't care if it's in Thailand or Philippines or wherever you have your labor. That labor cost is increasing. The price the customer is willing to pay is decreasing because systems like ours are coming about. And so there's a cross when that business doesn't even work anymore. And if DHL is struggling for e-commerce transactions and they're struggling to maintain a 3PL, then it just doesn't work any longer. So I'd say if you're a customer, any of our customers, if they're looking at 3PLs at all, they're looking at them primarily to assist on a particular trade lane where they need localized customer service support. So they need somebody okay enough to respond down there, right? Better than okay. And they need a local asset to justify it. They need warehouses, right? You need some sort of asset as a differentiator. It's not like everybody doesn't have planes. Everybody has planes, of course, the charter. But the fact that you're willing to take that risk, which is something the customer is usually not willing to do. I mean, if you're Apple, you're buying your own 747s if you really wanted to, and cutting FedEx clean. But I think right now it's really just looking at making sure that they have assets, good customer service, which is not the case right now for most 3PLs. They have assets and they don't select against their customer. 3PLs that choose the right provider for their rebate structure are not helping their customers, and that business is going to go away. Customers are getting smart. CFOs are starting to take a look at the supply chain teams. That business is gone.
Yeah, fair. How about, let's talk a little bit about what we do, right? About talent, about people, about and it's so important, right? In startups, it's vital because it's the key to the growth of the company. How do you hire people in Haven, and what's the key attributes that you look for?
This has changed a lot over time, as you might imagine. I mean, it's a very different industry than advertising or than finance. First, I would say that the product that you build, the culture you have, the types of customers you get are all a result of the type of people you hire. And that's something that, you almost have to learn. Every new industry you have to go in, you have to relearn that concept over and over again because you think you want one particular thing and it doesn't work out. So I think that's changed a lot for us over time. We've become far more transparent in the hiring process. We were very opaque. We were very we didn't tell anybody anything about us in the hiring process. We didn't mention numbers or anything like that early on. And I think we also early on prioritized people who had industry knowledge over people who had technology experience. And that's changed over time as well. The more we've acquired on the industry knowledge side, the less we've needed that, and the more we've focused on talent that's really curious, has a technical background, has been there and done it before. And I think that's the thing that kind of changes over time. People are the most important part of the business. Haven's going to have, if we're successful, Haven has hundreds of different types of products spanning multiple industries. Transportation will be a component of that right over time. If you think about how big a company can get, so if you're going to get that, if you're going to think in those terms, you have to be able to hire people that are the right fit for the place that you are now and the place that you're going next, right? I think that's the big thing. And also, we're not afraid to upgrade at the company. I mean, we up-level people. We're very blatant about it. We automate work. We're very blatant about that at the company. You can talk about it. We have that many transactions going through the system. We have 3 ops people, and they're all phenomenal, right? And that's because we focus on automation. We hire people that want to focus on automation. Right? You have to hire for your asset class. We're a VC-backed company. You have to hire people that understand you need a rapid rate of growth, right? And they can focus on that and think about how do they grow quickly and how they ensure their customers are successful and things like that. So we look for a lot of those types of things, which are very specific. I think the general thing that I personally look for is that if I'm hiring a manager, if I'm recruiting a leader in the company, I want them to be able to hire people better than they are. I want them to attract talent that's better than they are and have the ego to be able to hire that person and help that person succeed. That's not always something we've done right at the company, but that's what we're looking for, right? And we hire people that have a natural curiosity, can take accountability, take ownership, especially in the start. I think, early on, the people that you have are the people, that first 25, that sets the tone for the company forever, right? PayPal is the best example of the first 25, I think, ever. Right, that Elon Musk and Peter Thiel and all those guys in that first bit. It's just they had all this talent at the very beginning. They understood the mountain they were trying to climb and they focused on it. So I think that's the biggest thing. That's what we look for is curiosity. They've been there and done that. At what stage are they in their career? With it for all these types of things. Right?
Yes, very good examples. Yeah. And let's talk a little bit about the culture, because you mentioned about the culture of the company that attracts the right clients, the right type of opportunities, and you're the CEO, right? So how do you what is the culture of Haven and how do you consciously shape it?
So it's definitely changed. I mean, it's changed over the past 6 months. It's constantly this evolving, changing thing. The only way you affect culture at a company positively, you can always negatively impact culture, which I've certainly done at times, but you can positively impact culture by hiring. You hire the types of people that you want to set the tone for the next stage of the company. And early on, you're going to hire people that are really good individual contributors. And so you're going to prioritize as a culture, you're going to have this work mentality, right? And as you grow, you're going to prioritize people that have a little bit more strategic background that can really take advantage of an opportunity in a given market. And they're going to bring a new flavor to the company. And eventually you're going to hire people that wear suits. It happens, right? Every tech company gets to the stage, which is great too. You want that growth. You want that trajectory, right?
Though in today's world, it's more t-shirts and shirts. I mean, they're not really big on suits, technology companies, but I get your point.
No flip-flops. But so that's kind of thing. So I think we're at that stage where we're now in scale mode. And so we're growing the team with the type of people who have scale, who've gone from, small revenue to large revenue numbers at software firms, bringing a lot of that SaaS experience in-house, right? Whereas we're not prioritizing like maybe logistics as much as we did at the beginning. And that's usually how that works. That's how, it's like rings on a tree.
Yes.
Basically. You can see at what stage the company is based on the type of people they're hiring.
Yes, that's a very good metaphor. Tell us a little bit about what's your key learnings. Obviously, it's very interesting stories that you've gone through. You have exited a media company. Here you are now doing quite a different industry. Yeah. As you said, less corrupt industry. What's some of the key learnings that you've had in your journey as an entrepreneur so far, if you were to share with somebody that is thinking of it?
Yeah, kind of following on the last question, honestly, the people are the most important part. If you're the CEO and founder of a startup, you're going to want to do all sorts of things that you were really good at previous jobs, where you ran product, or you ran technology, or whatever, ran sales, whatever you did at the previous company. And you should not do those things with the majority of your time. You should hire great people to do those things better than you can do them. Because I think for me, at least, there's a natural leaning to look towards on individual contributorship. I mean, I looked at the product and like, well, whatever, this button's in the wrong place and the font's wrong, that kind of thing. No, what you do is you hire a great designer that's really talented, and they take over that role and they build a much better product. And you have to do that in every kind of case. You're more like a servant leader than you are an actual, than you are your natural tendency. My default, at least, was that. That's what I kind of learned. This is the second company I run. Even though I wasn't officially CEO of the last company, I did run the exit of the last company and manage that process. Media, freight, logistics, banking, they actually do have some similarities. People need to collaborate. Humans need to do work with one another. And they want to do that work in as honest and transparent environment as is possible for their industry. And so if you provide them tools to help them do that work smarter and more efficiently, they're going to gravitate towards it. That's it. That works in the media industry. That works in the finance industry. It works across the board. You've got trading screens in the finance industry. You've got demand side platforms in the media industry. And then you have, companies like Haven in the shipping industry. And so I think there's a lot of similarities between those industries because at the end of the day, it's literally all about people. I can't tell you there's all these sorts of ways to manage a board. There's all sorts of ways to raise money. And I would tell startups, though, if they're starting right now, don't take strategic money too early. There's a lot of accelerators. There's a lot of shipping industry accelerators where shipping lines are getting a piece of the action and freight forwarders are getting a piece of the action. Don't do it. You don't need to do it. It's totally unnecessary.
Yes.
Get better at selling your equity if you need to take that kind of money, but don't take strategic money too early on. It will completely starve your business. You're never going to affect the balance sheet of Firstline. Never. I don't care how many billions of dollars you're worth. You're barely going to make a dent in their balance sheet. So focus instead on building a real business that provides value to customers and don't go the easy way out.
Yes.
My example.
Yeah. Thank you for that. Well, Matt, pleasure. Thank you for the sharing. Thank you for the lessons. Thank you for your thoughts about Haven, about the growth, and we wish you all the success. And hopefully in a few years you dominate the market.
Thank you very much. Appreciate it.
Thank you for listening to our podcast. If you liked what you heard, be sure to follow us on radopalamario.com/podcast for all the show notes, links, and extra tips covered in the interview. Make sure also to subscribe to our emailing list to get the news in the nick of time. If you're listening through a streaming platform like iTunes or Stitcher and you like what we do, please kindly review and give us 5 stars so we can keep the energy flowing and get more people to find out about our podcast. I'm most active on LinkedIn, so do feel free to follow me to stay tuned for our latest articles as well as future guests for the podcast. And if you have any suggestions or any other idea, please feel free to write to me. I respond to all. And also, please make sure not to miss our next episode, where we will be having a few other C-level and top leaders in supply chain joining us. Stay tuned.